Hi guys, it's Thomas here from COTbase.com. Welcome to this week's Commitment to Traders review. Today we're going to look at the 45th COT report of this year. Before I start the review, a reminder for all of you, we've got two new services out, futurestradingguides.com, which will be focusing on futures markets, and FX trading guides, which of course, as it says in its name, is analyzing FX markets, but we've also added cryptocurrencies to the list as well. So back to the review, and let's start off with our first market, the S&P 500. As you may see, we have a 33% change in commercials positions, 28 in large speculators, and on this 52 weeks time horizon, you may see what that represents. It's definitely greater than average, although we've seen similar changes in the past. It is of course a bullish COT change signal. But we are receiving these in a time when volatility has increased in the market, so caution is advised. Jumping to the 5-year chart, you may see how extreme this market is. We are still much closer to bearish extreme levels, as you may see, suggesting in the medium to long term this downwards move in the S&P 500 can of course easily continue. Now, I've told this many times in the past. I'll repeat myself again. In case of indexes, I advise all of you to always have a look at other indexes as well to do COT analysis over there, because picture can be a little bit different. So you want to get a wider perspective about indexes in general with respect to the COT data. Moving on to the Mexican peso, we have a 20% change over there. Now you can see this is smaller than the previous market, but since we're talking about a currency, this change is actually pretty large, and you can see that on the chart over there. This again is a bullish COT change signal, suggesting there could be some rallies early next week in the Mexican peso against the US dollar. But jumping to the 5-year chart, we get an opportunity to analyze the extreme in the market. Now, it's quite easy to see on this 5-year chart that the most bearish extremes were visible over here in mid-2017, and bullish extremes back in 2016, and also in 2015. Now, we're more or less in between those extremes, so we have to have a look at the last major extreme, which was actually bearish, as you may see. So we're moving away from those bearish extreme levels, getting closer and closer to bullish ones. But as you may see, there's plenty of space left to go even higher, which of course means in the medium to long term there's a good chance that this decline continues in the Mexican peso. Moving on to the platinum market, which is our next one for this review, an 18% huge change with respect to metal market. So that's a large change over there, suggesting declining prices early next week. Now, on this 5-year chart, you may see that at this point in time, a couple of months ago, we had a huge bullish extreme in the market, which of course, as you can see, was an effective signal, and since then the extreme is declining. We are moving away from that bullish extreme, and as we are doing so, the market is going higher and higher. So the question is this relative extreme, this 31 report extreme in commercials and large speculators, significant enough to push prices downwards? Of course, that's a question that the market will answer in a few weeks or month time. Let's move on to large speculators COT Extreme. And opening orange juice, we can see what this 178 report extreme means in case of large speculators, but as you may see, it's the same for commercial. So this is a bullish COT extreme, no question to that. Pretty large one. You may have a look at the previous bullish extremes and see how well the orange juice market reacted to them. So this signal that we're getting from the market right now, from the COT report, seems to be giving us a good opportunity to analyze further the orange juice and possibilities for trading this market. The euro is our next market, where we have this 86 report extreme in large speculators, 85 in commercials. You can see that over there. It's undoubtedly a larger change, but there's no question to the fact that this extreme has plenty of space left to reach even greater extremes. So this bearish extreme that we had early this year, which ended this rally in the euro, is as you may see still in place. It's taking its effect. Price of the euro is going down, and this could of course easily continue. So this extreme that we have right now, although is over a year, so 86 reports ago, it's still not as large in my opinion. Now the dollar index of course will show us a very similar picture, since of course we know that the euro is taking the largest space in the dollar index basket of currencies. So here, as you may see, we have a bit of a bearish extreme, and again there's plenty of space left to reach even greater extremes, although maybe not as much space as we've seen in the euro. So anyhow, as you can see here, the last major extreme was this bullish one, which took its effect early this year and started moving the dollar index a bit higher, and this could continue from of course the COT report's perspective. So that was the last market for this review. You can look at other markets anytime on our COT charts page. A more in-depth and detailed COT analysis of course requires you to have a look at the page I'm analyzing right now, and of course subscribers have the option of looking at new COT report types and of course other data types as well, and of course all market categories, and of course some great functions as the long-term trend indicator, the volume and open interest scores, and of course the COT index can also be added to the analysis as well. I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Goodbye.